How you doing, everybody? This is Max Farrell. This is DexFXMarkets.com, and in this video, we're going to talk about the strategy that we're going to be using to trade with here. Now, in previous videos, you're going to see a lot of videos out there in the world about Max said this, Max said do that. I want you just to focus on one thing. Today, the 10th of September. It might be a little bit later than that now for you. But this is one of the final strategies and systems that I'm going to be putting together, because we have broken down all, like I said in the intro video that you're probably seeing to this course. There's that video sound again. But there is a process that we've committed to of learning from our systems from before and what really works. And we are now at a point where we have taken all of that as years worth of information, years and years of information, and boil it down to one system that works. Now, can you trade this on a 2-hour? Can you trade this on a commodity and an indice and all that kind of stuff? Can you trade it with Forex and all that? You know what? Yeah, you can. But that's all different type of lessons. That's all different types of things. If you want to make money in this strategy that we're going to provide here right now, we're going to use what we refer to as the over-under and the box validation method. Okay, we're going to use some tools, but I want to show you basically how the system's going to work. Okay, the market value, there's 3 or 4 different things that are here on this chart that you should already start being familiar with. Okay, I'm going to back out so you can kind of see the big picture here. The arrows are a depiction of a direction of an event that happens during a period of time. That's our priority system of our DEX atomic arrows. These say, hey, something's happening. Let's make a trade. Okay? But not all arrows are productive. Now, why do we have the non-productive arrows on there if we should only put the productive arrows on? Well, because there are some of you that trade all of the arrows. And so when this event happens, this is a good marker to be on. But for your case, where you're going to start with is that you're going to start with this very beginner strategy of using what we refer to as the over-under. Okay, now the 3-4 elements that are on board are called the support and resistance lines. Okay, these are here for your benefit as well. And we'll go over in great detail the support and resistance that you'll see probably a supplement video within this lesson. And in the next part, there is the moving average, which is called the MA. And this is set to 50, which means 50 previous bars. And the line that shows up on the chart shows the average of the market, whether it's being in a downtrend or an uptrend or sitting in a channel or what have you. Okay, and this is very important because this is the part that is the first qualifier of whether or not to be in a trade. 1, there should be an arrow. 2, that arrow should be in a direction that's either above or below the moving average. Okay, so if I wanted to take a trade for buy, then my buy signal should be above my moving average. It should also be into another qualifier within the box method that we'll talk about here shortly. Now, in order for you to better understand the arrows themselves and how they depict the price and the direction of that market value, okay, you need to know a little bit about the candles that they're sitting under or above. As you all know, a candle has a few different parts. It has the body, an open, a close, the body, and the wicks. Now, the wicks mean that this is how far the price came at one particular time. If a candle opens and closes higher than it opens, it's a bull bar. It's a bull candle, which means that it increased in value. If it closes lower than it opened, it's a bull bar, depicted in the fuchsia-looking color right here. When the arrow appears on this arrow, you can see this one here is for 8 o'clock, 0800. The close of the previous arrow or previous candle and the open of the current one should be roughly the same. But the arrow appears at the end of this candle. So when this candle closes, it appears. So sometimes the first candle in the signal may push the arrow down or up depending on the direction. Okay? But the price, wherever the price opens at for that candle is what we want you to keep in relative term later on. Now, since this arrow is below the actual MA, the price was actually above the moving average. So when we say that the arrow should be above the moving average or below the moving average, depending on the direction, we actually mean price of that open should be, the price of the open of the candle for the arrow should be above or below the moving average. Okay? So keep that in mind as we move forward into the next method. The next method of depicting whether or not you should be in the trade itself is using a box method to look at the previous 4 hours. So I'm going to scan back just a little bit. I'm going to grab my handy dandy box tool that we put in one of the first videos. And I'm going to come to the arrow that it's sitting at. But I'm going to go to one candle prior to. I'm going to start dragging my box about 4 hours back. Now if you see my little hash, my crosshair here says to the right, or right underneath it, 07.55, so 0700, so 55 minutes. So this candle, being a 5-minute candle, ends exactly at 8 o'clock. So now I need to go back from 8 o'clock 4 hours, which 4 plus 4 is 8. So 4 o'clock in the morning. So there it is, right there. You can kind of see it at the left. If I let go of my box at exactly 4 o'clock, it'll give me something to this effect. Now what I want to do is that I want to take the anchor point and I want to drag the top down, the high. We're looking for the high of this time period, the highest of the high, which is right here exactly at 4 o'clock. Now I'm going to do it on the close and open of the 4 o'clock. The close of 4 o'clock is right there. Okay? And on the bottom, I'm looking for the lowest of the low, but I'm going to do it on the close of the lowest. And it's right there. So now I have this box that has several different values. It has 4 hours worth of information, a high, and a low. But now it also has several other informations, which is called the mean, which is the middle. And that's what we're looking for next. Now, in this box representation, we see that the anchor points are actually in the middle of the box. So if I grab my handy dandy line tool, I hold shift, I just drag over to the right, I can easily see. I change my color to, I like yellow on these lines because they stand out. Okay, so you can see immediately that the line that I've drawn is at the middle of this box, which we refer to as the mean. Now later on, I'll teach you how to use the system with the gain box, which gives us all that information on board. As you can kind of see, 50% is the mean, 75 cents a quarter, 25% is another quarter, and the high and the low. Pretty cool, right? But if I also do this, I could switch it. So if I'm doing the high and the low, I could switch whether or not the one is on the high or what have you. That's your personal preference. Okay? So the components of this box are the high, the low, and the mean. But there's also what we refer to as the quarter mean, as you've seen within the gain box. Quarter mean, right? This would be the high quarter mean, and this would be the low quarter mean. If this was the top hemisphere, this would be the lower hemisphere. So in my box, what I'm looking for, as I stretch out, is that where does my price of my arrow, right, or the open, meet within my hemisphere of my control, okay, of my box. Since my price isn't above the mean, which is half, this would then actually disqualify this trade for me in our over-under theory. Even though that the first qualifier is that it should be above the MA, the second qualifier should be that over the past 4 hours, it should be above the mean of the price of the high or low. So this would disqualify this trade for me. Now, in other videos, you can later use the lower quarter mean and even the low of that time period to create trading opportunities. But for now, just use this method that if it's not above the mean. Don't use it to trade. Okay? This system is very easy to draw out if you're using the gain box. I come here, I grab my lowest point, and if it's for a buy, since there's already an arrow that's in the wrong direction here, I'm not going to trade on that one, right? So what I'm looking for is an arrow, the very first arrow that's above within a certain reason. Here's that first one. We're going to come all the way down here to the lowest. We're going to go back 4 hours. This is at 2200. So it's 10. So we're going to come back to 6 o'clock, which is 1800. And let the box go. I'm then going to increase the box to the highest value of that time period, which is right there. And then I'm going to lower the value all the way to the lowest time of that period. You can easily see that there is the mean. So if this is my signal is above the mean, way, way above it. This may also be another indicator to be careful and do a little bit of pullback. Where would you come to? You would come back to the first, either quarter mean or mean. And we'll talk about in the next videos on what one you should take depending on your risk value, on what risk you want to take. Okay? But that's how to set up the tools and use the gain box in the system here. We're going to talk in future videos on which levels to take, but we only take the very first, we only use in this very first part of the strategy, the very first arrow that's after, since this is broken over, kind of qualifies again, so this would be another signal. As you go through, you can decide whether or not you want to take more and more signals if they're closer to the moving average, but the further they get away from the moving average on a buy, they're going to want to come back. So you stand a potential to lose those kind of trades if they're too far away. But you'll get to learn that as you go down the list of different pairs and the different pairs you learn to use. Okay? So this is just the beginning part of the over-under strategy. And if you have a pair that has a, since this is the very first arrow after, you could possibly use this one. We take our little gain box, go to the previous box, previous candle. And since it's 10 o'clock, we're going to be looking for 6 o'clock. There it is. Very simple. There's the level that you would start with. Here's where the price is as well down into there. This level here is a little higher risk, but doable. And then, of course, you have the mean. Now, in future videos as well, we're going to also teach you on how to sort of push yourself into the trade to find structure and be able to trade at those higher levels. But for now, start with just putting a working order at the mean or the quarter level, depending on if you want to take a higher risk trade. Okay, I'm Max. This is Dex. We'll see you in the next videos. Don't worry, it's all going to come to you. And plus, if you have any questions, hit us up in Discord. You should have seen those videos so far on how to set up Discord and do all that kind of stuff. All right, I'm Max. This is Dex. We'll see you next time. And as always, trade well.